Were you aware that you have the chance to not work ever again just by owning a certain amount of Tesla stocks? Earning without having to work is everyone's dream. Stay tuned and keep watching to find out how to do that. A lot of people, especially those who are bustling around just to earn a few bucks, would be very happy if they earn without having to do anything at all. Although that seems impossible, investing in the right place might allow you to do just that. In today's video, you will find out how to never work again by amassing this amount of Tesla stocks. Tesla is a clean energy company and is currently leading in the electric vehicle market. In October of last year, the shares of Tesla are up more than 50%, and the company's market cap has grown to more than $1.2 trillion despite some recent hiccups, including a flawed rollout of its driver assistance software and confusion over whether Hertz really inked a deal with the electric automaker to purchase 100,000 vehicles. A $1,000 investment in November 2020 would be worth around $2,940 only after a year, representing a return of 193%, according to CNBC calculations. So if you had invested in Tesla in the said year, when the stock was worth just over $400 a share, you would have nearly tripled your money. Go back a few more years and your return would have been even greater. On November 2, 2016, Tesla was trading at around $38 per share, so a $1,000 investment then would have grown 3,025% and be worth around $31,286 in 2021 alone. Over the same period, the S&P 500 index would have given you a 142.4% return. If you had invested in Tesla in 2011, you would have a 5-figure return. Over those 10 years, Tesla went from selling just the Roadster to offering the Models S, 3, X, and Y. It has also announced the Cybertruck and Tesla Semi, but has remained non-committal about launch dates for both vehicles. A $1,000 investment in Tesla in November 2011 would be worth over $204,000 now, with the stock price increasing from $5.74 to $1,229 over the years. That's more than a 20,000% return. A similar investment in the S&P 500 would have given you a 357.4% return. However, it doesn't mean that the S&P is a worse investment. In fact, most experts, including legendary investor Warren Buffett, say it's the best place for most people to put their money because it holds every stock in the index, making it automatically diversified. According to some, owning Tesla stock might just allow you to retire within the next 8 years by 2030. Many Tesla bulls believe in the company's vision of a cleaner, more environmentally friendly planet and want to retire rich as a loyal Tesla shareholder. According to annuity.org, the median American retirement income is around $47,500, which means one will need at least $4,100 per month to retire comfortably in a Western country such as the United States. Now, if you live overseas or plan to retire in a foreign country, then you could retire with a lot less money. Many Americans choose to retire in foreign countries, such as Panama, Mexico, Costa Rica, Portugal, or even Thailand, to take advantage of geo-arbitrage and stretch their retirement savings much further. However, assuming that you prefer remaining in your current country and need at least $4,000 per month to retire comfortably and want to retire by 2030, then the minimum amount needed should be increased to around $50,000 to adjust for inflation. Using a standard 5% withdrawal rate, you will need at least $1 million to generate $50,000 per year in retirement income. If you continue spending 5% of your retirement savings, then your money will last you 20 years if you earn zero additional income once you stop working. The great news is that Tesla shares will appreciate in value over time. The business remains strong, so your money won't run out for a long time. Investing in Tesla stock is probably the smartest idea at the moment for investors who want to stop working by 2030. Tesla shares have compounded at an impressive 61% CAGR over the last 10 years, which far exceeds the 11% CAGR of the NASDAQ or S&P 500. Assuming that Tesla marches towards its ambitious goals of producing 20 million EVs by 2030 and continues growing at a CAGR of 60% annually, Tesla stock could trade near $30,000 by 2030, with an astounding $30 trillion market cap. If Tesla stock indeed trades for $30,000 per share, then you need at least 33 shares to become a millionaire by 2030. Some said that Tesla is pretty much everyone's retirement account these days. If you don't have a Tesla stock yet, this might be the best time to own one, since Tesla shares are about to get 3 times less expensive with news of a 3-for-1 stock split. Others see Tesla's move as a way of getting included in the famed Dow Jones Industrial Average, which tends to include less expensive stocks. Apple, for example, announced a 7-for-1 stock split in 2014 and got included in the Dow in 2015. The split is no guarantee that it will be included in the Dow, but the index may want the world's most valuable car company and a pioneer in electric vehicles. Based on what you have seen so far, will you be interested in investing in Tesla stocks now? Let us know what you think in the comments section below. If you have decided to invest in Tesla stocks, this is how you should do it according to Forbes Advisor. First, open a brokerage account. It is the key to buying and selling securities like stocks, mutual funds, and exchange-traded funds, ETFs. A brokerage is more than just a ticket to ride Tesla to the moon, though. It also has all the research and education needed to be a successful investor, as well as different types of investment accounts designed for particular goals. If investing for retirement in Canada, put any kind of investment vehicle, including Tesla stock, inside a Registered Retirement Savings Plan, RRSP. Not only will you not have to pay taxes on the money until you take it out, but the IRS also recognizes Canadian RRSPs. So you won't have to pay taxes on your US-based Tesla stock to Uncle Sam as long as the investment remains in an RRSP. For more flexibility with the investment account, save for a Tesla you wish to own in the future, for example, you probably want a taxable brokerage account. These let you invest for any purpose or any time frame, though you'll have to pay taxes each time you sell an investment for a gain or received dividend income. All brokerages are not created equal, so you'll want to be sure to compare the fees, available investments, and services offered by at least a few to determine which is right for you. You can also peruse our picks for the best online brokers. As for the paperwork required to buy an American stock like Tesla, your brokerage will take care of that for you. Second, decide how much to invest. Consider these questions to decide. What's your budget? What's Tesla's current price? What's your investing strategy? What about other investments? If investing already, make sure you think about how Tesla fits in your portfolio. Any individual stock purchase should play a relatively minor role in the portfolio of the average investor, said Chip Workman, a certified financial planner with the Asset Advisory Group. A good rule of thumb is that no individual stock should make up more than 5% of a portfolio. Third, review Tesla's performance and potential. Before buying Tesla stock, or any stock for that matter, it is wise to do some research into the company's financials, performance, and future outlook. The easiest place to get started is through a company's annual reports, Form 10-K, and quarterly reports, Form 10-Q. Public companies like Tesla are required to publicize detailed information about their financial health in these. You may also turn to experts for their input. Fourth, decide your order type and place it. After deciding how much you want to invest in Tesla, you can buy your first shares. You'll need to log into your brokerage account and enter Tesla's ticker symbol, TSLA, and the number of shares you want to buy, or the dollar amount you want to invest. You can use a simple market order to buy shares at their current price, or you can try a more sophisticated order type, like limit or stop, to purchase Tesla only if its price falls below a certain threshold. Fifth, keep currency fees and takes in mind. When buying stock in an American company like Tesla from Canada, you will have to pay a currency conversion fee to convert your Canadian dollars to US dollars. To avoid these fees, you can keep money reserved for purchasing American stocks in a US dollar bank account. Lastly, evaluate your investment. In investing in Tesla or other securities, it's a good idea to periodically check in on their performance. It is probably easiest to start with the annualized % return. You can also revisit Tesla's financial information to make sure it's still moving in a positive direction. Outside of comparing Tesla's performance to that of other stocks, you may also want to measure it against industry benchmarks, like the S&P 500 and NASDAQ Composite Index, which will tell you how Tesla is performing compared to the market overall. Overall, based on the presented data, Tesla stock really has the potential to make you rich and eventually allow you to retire in the near future instead of the distant future. Still, despite Tesla's massive stock growth, any individual stock can outperform or underperform, and past returns do not predict future results. Don't forget to watch our other videos for more Tesla stock content.